Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 334 of our YouTube channel and podcast, and I could not be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today, we are going to be talking about questions, and specifically the questions that we have about investing, right? Because we, as a society, don't invest near enough, right? And we as a society have a lot of, just uncertainty about markets, a lot of uncertainty about how to invest. We have a lot of uncertainty about where to invest, who to invest with, when we should invest, all these different things, right? So I'm going to go through the who, what's, when, where, whys, and hows of investing in today's episode so you can better understand, what investing should look like, and ultimately you can get into the world of investing yourself. So stick around for a discussion of all that and more in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. So look, I know investing can seem daunting to many. I understand. That for those who don't know or don't understand, who have never been taught, it just seems like this crazy world where only rich people operate, and it does not have to be that way, right? Investing is a world for everyone, and it needs to be a world for everyone because we have to have money to retire on. We have to have money to pay for our kids' college. We have to have money for all of these things that ultimately we're going to have to pay for. All of these things that are ultimately going to come to a head where, like, hey, we need to take care of this. We need to pay for this, and we don't work anymore. We don't want to work anymore. Because ultimately, who wants to work into their late 60s, 70s, 80s, whatever? But the sad fact is that a lot of people do out of necessity because they don't invest or because they didn't invest properly. And that's not what I want for you. I want you to have the option to live the life that you want to live as you move forward. And the only way that you give yourself options, the only way that you give yourself true financial freedom, like I talk about all the time, is via investing. Okay, so again, I'm going to answer the questions about investing, right? The major questions, and there's a ton more questions that can be asked, but I'm just going to start with who, right? And I don't think this is the biggest question around investing, but the who question. And in my opinion, the biggest who question around investing is twofold, right? One, who should you invest money with? And that answer is nuanced nonetheless, but the answer is this. If you are a small individual investor, who should you invest money with? Well, you should invest money by yourself with a company that is trusted and that shouldn't have any problem with investing your money in a way that is long-term oriented and that won't give you any type of inkling that they're into trading or whatever else, right? Should you use a financial advisor? Again, as a small individual investor, I don't think that there's a huge need for a financial advisor unless you just absolutely don't know what to do and you need that hand-holding and you need that guidance. But early on, you can invest on your own, and we'll get into the what here in a little while as to what you may want to invest in, and that kind of ties into the who as well. So who, as far as who do we invest our money with? I think you start early with your own account, and you can manage your own account and do so in a way that makes you comfortable. Nonetheless, we just need to be putting money away. We need to just be aggressively investing money for our future. So the who, not that difficult, but that's only part of the who. I think the other part of the who is who am I, right? Who am I when it comes to investing? And when you haven't invested, it's hard to answer this question. Okay, but if you don't know who you are, then investing is going to be a difficult road for you, because self-awareness is a big deal. And self-awareness is a very big deal when you are making financial decisions. If you know that when the market crashes, you have this tendency to want to sell everything, or you have this tendency to want to, metaphorically jump off a building, right? When a market may crash, or, you don't have a whole lot of tendency to take risk, or you do have a lot of tendency to take risk, whatever it may be, right? You need to know yourself, because if you don't know yourself, you may, get invested in things that, you're not comfortable with. You may get invested in things that aren't suitable to your risk profile. And if that's the case, then again, investing is going to be very difficult for you, because it's going to take a lot of your time to simply just say, what am I going to invest in? How am I going to invest? And again, we're going to talk about those questions as we move forward. But if you don't start with who you are, then answering those questions becomes all the more difficult. Answering those questions becomes strange, because now you're like, okay, do I invest like other people? Do I invest like this person or like that person? And the answer is no. You invest like you. You invest in a way that, one, makes you comfortable and allows you to sleep at night, but two, is going to grow your money in a risk-adjusted way that you are comfortable with, right? And that you need over a long period of time, right? So ultimately, the who is who do you invest with, and then who am I when it comes to investing? And again, we could dig way deeper into those questions, but we're going to move on into some of these other questions, because I think some of these other ones can be far more important. So that's the who. The next question is the one that I think people ask the most, and it goes, what do I invest in, right? What do I invest in to make the best returns? What do I invest in based on my risk profile? What do I invest in based on what I know about myself? What do I invest in? And I can't answer this question for you, okay? I can't. There's far too wide a universe of things to invest in. And there's far too wide a universe of things that may actually be good for you and that may actually be beneficial to you, okay? So I can't answer specifically what should I invest in. But I'll tell you this. Over the long term, the stock market has provided great returns, annualized, compounded over a long period of time, right? And the stock market has created wealth for people. And I think you can allow the stock market to create wealth for you as well, right? So am I saying that every single dollar of your money needs to go into an S&P 500 index fund? No, right? But am I saying that there is definitely a place for the vast majority of people in the stock market? Absolutely. And especially if you're trying to reliably grow your money over a long period of time, absolutely. Now, do people invest strictly in real estate and make a lot of money in doing that? Sure, right? But typically when people want to invest in real estate, it means that they're going to lever up, they're going to take out a lot of debt, and they're going to try to, either flip houses, or they're going to try to, have all this debt and, pay it with, higher rent payments than the mortgage payment on the homes or on the properties or whatever, which is perfectly fine if you can do it effectively. But ultimately, that's a lot of debt, a lot of time, a lot of management that is not as necessary with the stock market, just to make returns that are very similar over a long period of time. Okay, so ultimately, I think what can come down to many things, but I think part of your what to invest in needs to be stock market related, because the returns are just they're too good, right? It's too good to be true over a long period of time, and it will compound well for you. Even when we've seen periods of high growth like we have, and future expected returns drop, those future expected returns are still likely to be far greater than where you can find reliable returns elsewhere. So that's the what. Then I think the other what is, what will I need investing wise? What will I need to have invested to retire? And I think this is a great question, right? Because if I can answer this, if you can answer this, then you can know what your goal is. You can know what your benchmark is, and you can work towards that goal. And as we work towards those goals, we can adjust our plan. We can see where we're at. We can make the best decisions for ourselves that are going to affect us over a long period of time. So I think we have to answer that question. So once we know that question, then what can we back into? We can back into the how much we need to invest, which we'll talk about here shortly. Right? So we can back into the how much, we can back into the how long, which again, we'll get to it here shortly, right? So we can back into those questions, and then those can better help us to set up what our life is going to look like, what our budget's going to look like, what our investment allocation is going to look like in order to get to where we want to get to by the time we want to get there, okay? So those are our two what questions. So we covered the who, we covered the what. Then let's talk about the when. Okay, so the first when question is, when should I start investing? And the short answer is as soon as possible. Okay, but there is a far longer, far more nuanced answer, and I feel obliged to provide it, right? Because as soon as possible makes it seem like, well, the very next dollar that you get, you better go invest it if you haven't invested yet. And to some extent, that is super valuable, right? And to some extent, that is super useful. But to another extent, we need to look at our finances in a holistic way. We can't just look at our finances as what makes us returns and what doesn't, right? Ultimately, if you know me, or if you know the financial action plan and you know what I put out there, day after day, then you know that I call you to do some things before you ever invest, and I call you to do some more things before you ever invest in an aggressive manner. So let's just walk through the financial action plan very quickly, right? The first thing that I tell you to do is to budget, right? Create a unique monthly budget. Okay, this is before we invest. We need to know where our money's going, and we need to track our spending. All right, so that's the first thing. Then I tell you to have 1 month of household expenses set aside, so as a small starter emergency fund. Then I tell you, you can start investing only if you have an employer match in an employer-sponsored retirement account, and you are just taking the match. No more, no less, just take the match. Okay? Then I tell you, all right, we've done that. Now we need to get out of all consumer debt. Okay? All consumer debt other than our mortgage. Mortgage is large debt on an appreciating asset, so we can push that off just a bit. But we need to be out of all other consumer debt, because that's going to hold us back from building wealth over a long period of time. Then the fifth thing is to build an emergency fund of 4 to 6 months of household expenses. And then the sixth thing is to invest at least 15% of your income for your future and your kids' future and your family's future, right? In some way, shape, or form, 15% of your income at minimum needs to be going towards your future. Now, when I'm saying, okay, the who, what, and then the when, right? When do we invest? Well, in the first place, we invest after we have budgeted and have a month's worth of expenses set aside. We can invest in our employer-sponsored retirement account only if we have a match available to us, right? So that's when there. And then when past that is, well, after I'm completely out of consumer debt other than my mortgage, and I have 4 to 6 months of household expenses that is sitting in the bank. So there's the when to that. Okay, so we need to know where in our financial plan do we invest, and then ultimately how long, and we'll talk about that here in a minute as well. But the when do I start? When do I begin? That's when you begin. You begin if you have an employer-sponsored retirement account, after you have a month's worth of expenses set aside and you're budgeting uniquely every month, and then ultimately you don't get into the big boy investing, the big girl investing until you get past paying off all consumer debt, and then ultimately having yourself an emergency fund of 4 to 6 months worth of household expenses. Okay, so that's the win. And then I think another win that a lot of people would ask is, when do I sell and when do I buy? And the short answer is you always buy and you never sell. Okay, but that's not a super realistic answer. All right, because ultimately we're likely going to sell some assets over time. We're likely going to have to for a myriad of reasons. Right. But ultimately, if you wanted to just answer this in a simple way, which I'm going to try to for you here, I think, when do we buy? We buy every single paycheck. We buy every single time that we get paid. Right. We buy more investments. We buy. When do we sell? Well, we sell when we need something. Right. So when we are trying to pay for whatever it is, trying to pay for something in our financial life that we are investing for. So that may be a part of our win. Do we sell? When else may we sell? We may sell to rebalance, right? Because we need to rebalance our portfolio every now and then. Most people do, right? Actually, most people do not, but most advisors suggest that you do. Right. So when we rebalance our portfolio, then we may do some selling. We may also do some selling when an asset has gotten overvalued. Right. Which, again, this goes into the individual stock picking and things like that, which I'm not going to dig into far too deeply. But those are times when I think we should sell. So always be buying, always be buying, and then sell in those situations where either you need the money or you're trying to get your portfolio back on track. Or ultimately you have an asset that is ultimately overvalued, or an asset that maybe has lagged for a long period of time and has put a drain on your returns, and you were just wrong on, right? And so you can discard those from time to time, especially with individual stocks, individual investments. Okay, so we've got the who, the what, the when. Well, then where? Now, what do you mean where? Where do we invest? Where, do I put my money? And, you feel like this has a lot of overlap with some of the previous questions, and it does, right? All these questions really tie well together, right? But when I'm talking about where, I want to talk about where as far as what account, right? So I know it's a what question, but where do I invest my money? Meaning, where in what account do I invest my money, right? And I think this, again, is dependent on you, right? This is dependent on your specific situation, because we want to invest money in a way that is most effective for us, right? Most effective for us as investors. So what type of accounts should we use? Well, and why do they differ? Well, don't I just get an investment account? Well, not necessarily, right? I talked a little while ago about employer-sponsored retirement accounts and having a match, and having that match available and taking advantage of that match. That is a place that you should put your money. That is where, right? That's why I tell everybody to take advantage of that if they have a match available to them. So 401ks, 403bs, things like that, they are tax-advantaged accounts, right? Meaning either you are deferring the taxes on those investments into the future, or you are having tax-free investments into the future because you already paid your taxes. So it's tax-advantaged, and you're able to, get free money associated with it, right? So I think that is a big where, right? That is a place that we should invest our money. Where else should we invest our money? I think IRAs is a great place because, again, they are tax-advantaged in a similar way. And allow us to pick our investments in a way that we would like, right? 401ks, 403bs, employer-sponsored retirement accounts are going to have more restrictions as to what you can invest in. But ultimately, IRAs give us a lot more leeway and give us a lot more flexibility into what we invest in. And And then where else, right? Brokerage accounts, taxable brokerage accounts is a pretty obvious answer because most people use them. And most people who don't know about any type of tax advantaged account is going to use them. You get more nuanced as you go down the line. HSAs is a great place. So if you have a high deductible healthcare plan, you can actually invest money for your ultimate healthcare expenses. And then if you have that money long enough in that HSA, then you hit age 65, that money becomes like a traditional IRA, but you get triple tax advantage if you use it for medical expenses. And then you just get the money with a tax deduction and tax deferred growth if you held it past 65 and used it for other reasons, right? So an HSA may be where you need to invest your money or want to invest your money. But ultimately, an HSA should not be the primary place. The primary place should be in those other tax-advantaged retirement accounts and then brokerage account investing as well. And there are other places that you can invest your money for sure. But those are places that I invest my own. Me and my wife invest our own money. And I think that they're good places that we can really pay attention to and focus on. We can also invest money into our children's accounts. So their 529s, their UTMAs, their UGMAs, things like that. Again, also really good places to invest money. So we've got the who, we've got the what, we've got the when, we've got the where. Now let's talk about the why, right? And just like anything in our financial lives, why is extremely important. Why you do something is extremely valuable, right? Because if I don't know why I want to do something, if I don't know why I'm going to go about doing something, then the likelihood that I am going to continue doing that thing over a long period of time is not very high, right? I need to know why. I need to know what my motivation is, right? I need to know what the reasoning is behind something. And some people are far more like that than others. I am definitely like that, where as a kid, I'd be like, well, why, right? Why do I need to do that? Why is this important, right? Because I wanted to know that what I was doing had meaning and what I was doing had a purpose. Well, in our investing life, we want to know the same thing. We want to know that what we're doing has some meaning and what we're doing has some purpose. And so the why is specific to you, right? Your why is different than my why and other people's why. But just some basic whys, right? Why do we invest? Why should we invest? Would be something like this. We invest so that we can grow our money, right? Relative to inflation, relative to our money just sitting in a bank account, right? We can grow our money. We can increase the value of our money over time. We can increase the purchasing power of our money over time, meaning that a certain amount of money becomes more money, therefore can buy more goods over time. Right? And we invest money so that we can live our dreams, right? We invest money so that we can do all the things that we want to do over time. We invest money so that we can have freedom, right? We invest money so we can have freedom. And that's such a big deal, right? Financial freedom is huge. I'm not saying that the only way to experience being free in your life is by being out of debt and investing money for your future. But I will tell you this, having the options that doing those things allows you is just invaluable. It's a huge advantage. Having that freedom, having that ability to make your own decisions and do things for yourself is absolutely huge. So you need to know what your why is, right? Your why may specifically be, I want to pay for my kids to go to college. That may be your why. Your why may be, I want to retire to a beach in the Caribbean. That may be your why, right? But we all need to know what our why is. We need to have a clearly defined why and a goal that we're moving towards, or multiple goals that we're moving towards. And if we better understand those goals, we better understand our why, then we will consistently feel motivated to continue investing. And we will continue to do so over a long period of time, as long as that why is in view. And your why may change, right? But ultimately, you need to know what the why is, okay? So we've got who, what, when, where, why, and then how, okay? So instead of talking about how do I invest, I want to talk about how much first, right? How much do we invest? How much should we invest? Well, first off, I give you in the financial action plan, I say at least 15% of your income. Now, why 15%? Well, 15% gives you enough room in your budget once you're out of debt to be able to pay for housing, to be able to pay for your other expenses, and still have margin in your budget that is plenty, right? And you should have plenty of room to put away 15% of your income. That should be the case if you are out of all consumer debt and you're making at least the median household income that there is out there. I understand if you make quite a bit less, then it may be a little more difficult to get to some particular amount, but still, it is a percentage of your income, right? We're not talking about a dollar amount. We're talking about a percentage of your income. So I think 15% is doable for most people who are out of debt and they are tracking their spending, their budgeting effectively, right? So when we talk about how much, that's kind of my starting point. And then ultimately, how much? Well, as much as possible, right? As much as possible, you need to be investing over a long period of time. Once you've got your mortgage paid off, you've got your home paid for, you need to invest absolutely as much money as you can because in doing so, you will be able to accelerate your financial growth, accelerate the amount of money that you have set aside for retirement, and be able to get to financial freedom a lot quicker. Because ultimately, the number one indicator of having money in retirement, the number one indicator of having money in your investment accounts is actually putting money away in those accounts, right? It is not necessarily the rate of growth, although that is important. It is not necessarily did I invest in this fund versus that fund, or passive versus active, or whatever, even though, again, those have very clear impacts, right? But the biggest indicator, the biggest thing is, did I put money in my account, right? How much money did I actually put in? And again, as much as possible would be a great answer over a long period of time. So that's how much. And then you may also ask, well, okay, how often? Right? How often should I invest? And I kind of hit on this earlier. This is a very simple answer. Every time you get paid. Every time you get paid, you should invest money. Every time you get paid, you should be putting money away for your future. And it should be as automatic as you can make it, right? Whether it is a deduction out of your paycheck or whether it is money that comes directly out of your bank account without you ever having to think about it every single month or every single, pay period, 2 weeks, whatever it is, right? You should be putting money away systematically over a long period of time. So that's how much, how often. And then I think another good how is just how do you know when you're done, right? How do you know when you can, kind of rest on what you've built? And the answer I think that comes to mind is whenever the amount of money that you have can sustainably create the amount of money you need to cover all expenses plus some that you will need to live your life, right? And that's not an easy question to answer, and that takes a lot of analysis, and it takes a lot of work on your part to determine how much money that is, right? But ultimately, if you have enough money to live your life and to have options and to be comfortable and to do all the things you want to do plus some, right? And that money is coming off of some nest egg in a sustainable way, meaning that you don't necessarily have to eat into your principal over a long period of time, then that is how long you need to invest, how you're done. You've gotten to that point. Now, ultimately, you're going to invest until you're no longer here in a realistic manner, right? But ultimately, how do you know that you're done with accumulation? That's how you know when you have enough to sustain yourself over a long period of time. Now, there are so many more questions that I could ask. There's so many more questions that we could cover. If you think of some in the who, what, when, where, why, how categories, just drop them in the comments below, and I'll be sure to answer anything that you leave down there. But ultimately, I think that these are big questions. These are questions that we need to ask and understand about our investing life. And the more that we understand them, the better we understand them, the better we'll be equipped to make good decisions in our financial life over a long period of time. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and let me know that you're interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. So tune in tomorrow as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.